small and medium enterprises so passionate about this, and I think it's what they're listening to. So I just share with you 6 things: establishment, how to access, some performance indicators, improving the one we have, what we think about transition, and then enhancing infrastructure. This is the establishment. Number 1 is eligibility. How does an MSME qualify to participate in this scheme? The first thing is that you have to be registered, and that's why probably Shikai will be coming in. You must be tax compliant, you must hold a valid business permit, you must be credit worthy, you must be borrowing for business purpose. The risk sharing arrangement is 50-50 pari passu. In other words, we share risks on the market with the banks, but the exposure for government is 25%. We do not go beyond 25%. The current scheme is up to 5 million Kenya shillings for 36 months. We have 7 participating banks for the starting point. We seek to grow this to a number of banks. It is administered under the National Treasury. That's why I'm called the scheme manager. We have the oversight steering committee and staff from National Treasury. How do MSMEs access? Important for us. If you are a qualifying MSME, you will approach one of the PFIs. It's a portfolio guarantee, so we will do guarantee one after another in the National Treasury. Then you will be evaluated and approved based on PFI standards and our criteria. You register with us through Central Bank of Kenya, and then the product will be managed by the bank for the time of its life. We will come in when there is a claim. What is the performance? As we speak today, we have 2850 loans issued, 4.46 billion on the market. As we speak today, I've just seen data for February, but I've just landed in my desk to be reviewed by the team, and then that will be data of January. Then already 46 out of the 47 counties, 11 sectors of the different economies, averaging at 13.3%. These are the real facts, the data that we have currently, not data that we do not have. Loan ranges from 1 to 6 months, but an average of 25 months. We have the sizes there. Micros are at 28. We have micro 28. And then of course, we have micro, small, and medium, and all of them accessing. Medium are at 14, micro 58, and then the small at 28% in terms of access. The sectors, trade is the highest in terms of access at 75%, but we still have issues with that because of the way the sectors are classified under CBK. Agriculture is being 1.64, and other sectors you can see them there, including education, they are specified. In terms of the outreach, there are the 46 counties, but Nairobi seems to be having the highest percentage. There are more beneficiaries in Nairobi than there are in other places. This is also consistent with our MSME data in terms of the country. So we are not quite outside that, but we seek to reach other segments. Out of the facilities that have been released, 812 have been fully repaid. This is the beauty of Maharani scheme. So those have been fully repaid, which is 1.02 billion Kenya shillings. As at 31st May, utilization was 41.13. 85% of the facilities are classified as normal, in line with Central Bank of Kenya. We haven't paid any claim yet, but we are processing some. But that shows you that this is quite a performing portfolio as we speak today. And one of the things that we report is that this portfolio is still performing pretty well. What have we done? We have engaged stakeholders, individual MSMEs. We have had discussions with participating banks to receive feedback. We have had discussion with World Bank, FSD, USA, IFAD, KFW on potential support for CDS and implementation. We have had discussions with the academia, that's Nairobi University women, to help us reach and understand how to reach more women. We have had discussions with other ministries, departments and agencies of the government to seek their support. What we want to do to improve the current scheme, what are the things we seek to do to improve what we have? Number one is to onboard additional participating financial institutions. Number two is to vary the guaranteed coverage for some of the MSMEs so that we cover more. Number three, to develop different products to meet different needs on the market. Number four, we are doing policy and legal reforms to enhance the eligibility for more inclusivity. We want to open it up more to the beneficiaries. And then how far are we in terms of establishing the next scheme? This was a COVID intervention. We want to establish an independent legal entity, so there's a task force working on this. We are focusing on impact, sustainability, and efficiency. We want to consider guarantees for high impact proposals such as climate change, investment, as well as targeted guarantee coverage for sectors and groups of interest. The required work is to amend the law, which is the Public Finance Management Act. We want to mobilize additional capital. Of course, we want to constitute a board. Continuous capacity building. We are working with Central Bank of Kenya to have this recognized as a partial sovereign guarantee. Then, of course, for the banks that are in the room, we seek to have risk-based pricing model to take into account the risk premium that we have taken off. I think we are basically done. Thank you so much.
I can affirm that indeed Ronald is very passionate about issues around the credit guarantee scheme, and particularly to ensure that the MSMEs benefit from this scheme. He talked about registration. Yes, indeed. We wear so many hats from the Business Registration Service. We are a state corporation, not formally, we're still under the Office of the Attorney General, but we are a state corporation, and we are mandated to oversee the operations of the company registry. That's why we refer to registrations. We register business name, companies, limited liability partnerships, and partnerships. And then we also have the official receiver in insolvency, who basically deals with the implementation of the Insolvency Act, as well as regulate the insolvency practitioners. Then what has brought us here today is the Hire Purchase Registry that I don't think we'll concentrate on that today, but more so we'll concentrate on the Movable Property Security Rights Registry. And I'm the Deputy Registrar there. So I know you're surprised your name is there, I quickly typed it. Luz mentioned that the reason we are all here is because of the risk of default. And I was perturbed as we were having tea out there because a number of the lenders don't know about the Movable Property Security Rights Registry, which is something that I ideally is the first stop if I was to the lender, because I would say in the credit infrastructure ecosystem, the PSR registry, and I think Luz has already alluded to the fact that we are enablers in ensuring that there is a responsible credit system. way of a background. Maybe the reason we are all not well versed with the Movable Property Security Rights Act is because we still hold on to the Chattel Transfers Act. That was repealed. We now have the Movable Property Security Rights Act. The challenges that we had with the previous regime and those who were there before can attest to the fact that there was a multiplicity of law trying to speak into the secure transaction regime. And with the multiplicity of laws, you find that there were various registries within which, as a prudent lender, you were required to go and query to ascertain if there is any encumbrance to beat a company or if at all an individual has borrowed a loan. And so because of that, lenders sought to shy away from issuing credit. That's, I mean, if something is risky, definitely they run away. And you find that there was financial exclusion because the small and medium enterprises didn't have the traditional assets that are normally used to. Like they didn't have the cars, they didn't have the land. So all they had are the movable property security rights, and the previous regime really excluded them from accessing credit. So a concerted effort was made by the government to ensure that we review the laws that govern the secure transaction regime, and the movable property security rights was operationalized in 2017. And that's why I'm a bit surprised. 2017 is way back, and we're still not well versed with it. And from the speech of the PS today, he indicated that the registry took a functional approach where all rights in movable assets created by either an agreement and secure a payment or other obligations are required to be registered under the Movable Property Security Rights Registry. This is provided for under Section 4 of the Movable Property Security Rights Act. One of the key take-home that I hope you will take from here is that the only way to perfect a security is through registration under the MPSR Act in relation to movable property security rights. Movable property security, movable property. The reason we say you are required to register there is we all know that there are various competing interests, and if you don't register, then you stand at risk of losing. I was giving someone an example of a bank that it was quite a huge amount of money and they failed to register. The second one really knew that indeed there was an arrangement between the two of them, but they rushed and registered. So unfortunately the first one who had the agreement ultimately lost, and the second in time, but the first one to register was able to be given the first priority. Of course, the reason I've talked about priority is that the first one to register gets a priority. Of course, for every rule, there are exceptions, and one of the exceptions is that buying the ordinary course of business, then at least they have a justification. In issues of transferees of fund, if someone, a grantor consents to you using some money in the bank that he has used as security, then as long as you don't have knowledge of that. And then lastly, now the most important thing is now the electronic registry that we have. A number of speakers have talked about the unique identifier. As Kenya, we are privileged to have the IPRS that we can use to query and obtain, based on the unique identifier that we have, we are able to search. So one of the parameters that you can use to in the registry is the unique identifier. So be it your ID, be it the company's registration number, or the entity, whichever entity it is. And you've clearly seen that the company has some encumbrance to that effect. So it is really an enabler in the sense of that it gives that transparency for credit, because I'm sure that is all we like to hear. The challenges, one, I know, and I'll show you the statistics, is the issue of searches. The lenders are not conducting searches. I've had a number of you saying that the reason is because of the fee component, which is only 500 Kenya shillings. So based on the risks that are there, I always feel 500 is not really a lot. And then another issue that we are also sorting is when you log into the eCitizen. First thing is you're required to log in as an individual, and then from the back end, as long as you're given access, then you log in to be it Equity, whichever bank it is, you log into the company's account. That is something that we are also sorting. There's another issue of double registration. We're still requiring companies to lodge with the registrars their debentures. Equally, that is something that, BRS company registry is one of this. M-Pesa company registry, we form under BRS. So it's something that we are working to ensure that the two systems speak to each other. We are also in touch with teams, NTSA, registration of ownership of cars. That is a conversation that is going as well. And then another challenge we have is in relation to pledges of warehouse receipt. That is also a conversation we are having. One big point that we have not started having a discussion is about digital assets. The fact that control is a big topic. So these are some of the challenges that ultimately we are facing as a registry. I'll finish off with the statistics and I'll rush them through. So those are the initial notices that we've registered over the years. You'll find that the graph has been improving. We have a surge in 2019, 2018, because this was immediately after the law was operationalized, and we had 9 months for prior interest to be registered and the initial notices. So for every 6 initial notices that are launched, at the moment, only 1 search is conducted. Those are the prominent collaterals that have been used at the registry. And then Louise is right when she said women pay off their debts quickly. So you can see from the statistics that we have, the banks are comfortable loaning women, medium and small enterprises. Yes.
Senior Risk Officer from the Africa Guarantee Fund. He will also be joining us on this conversation. Remember that the session is leveraging on credit infrastructure to expand credit. Karibu sana, Mr. Joshua.
Thank you very much, Eddie. As you heard, my name is Caroline Karanja. I'm the CEO of the Association of Microfinance Institutions, an umbrella body for microfinance institutions with 73 members, serving in all 47 counties and reaching out to about 10 million clients. So, but I'll not talk about AMFI today. Today I think we have a session that we are talking about. And because you've already heard from Ronald and Shigadi, I probably will ask Joshua to just say something small about himself, and then we can move into the question and answer session. And then probably also engage the audience. I know we don't have so much time. I think we ate into the time in our break time. So we will try and go through this session, but the panelists are there just in case you want to engage them over lunch hour or after this session. So
thank you, Carol. I'm very happy to be here. As you heard, my name is Joshua Obekele, Senior Risk Officer at African Guarantee Fund. I've been at the African Guarantee Fund this will be my 9th year, going to the 10th. And I must say the discussions that are going on here are really critical. And maybe later as we talk, I'll be able to explain how this links up to what credit guarantee schemes are doing and how the topic itself becomes critical to the wider subject of today. Thank you very much.
Both by Shigadi and Ronald. And one of the things I wanted, I think I had a couple of questions which you have tackled through the presentations, but I wanted to specifically ask Shigadi. You've talked about your session outside with some of the practitioners here, and they didn't know about your work or what you're doing. So maybe I could ask, has there been any user education for MSMEs, the individuals, the bankers who are here, the financial institutions, and even legal people, because what you're dealing with requires sometimes a legal engagement. Because do they really understand the purpose, application, or even its existence properly? Maybe you could tell us what you think about that.
Thank you, Caroline. So, from the business registration service, initially we had the financial FSSP under the National Treasury that really helped us in conducting sensitization to our users. Something that we did during the COVID pandemic, and unfortunately at that time now we had to conduct online sessions all through. And you know, maybe because of the online sessions, that's why it has not resonated that much as we expected, but we really indeed tried to reach out to the MSMEs, the lawyers, you name them. All our users, we tried to create that platform for them. However, I also want to thank FSD Kenya. They have also held our hands in conducting sensitization, particularly even to through now Kenya Bankers Association. It's something that we have extensively, and we are continuing to sensitize them on the same.
Direct this to Ronald. I know you quickly took us through the credit guarantee scheme, and I just wanted to ask you to once again maybe tell us the role of that scheme and how it accelerates the access to credit for the consumers and the MSMEs. I know you probably touched on it, but maybe you can expound on that.
Basically, to de-risk the MSMEs, they are perceived to be risky when they go to the bank. The scheme is kind of a de-risking mechanism where you are taking part of the default rate. So there are two things about it. One, you assure the bank that in case there's a default, the government will come in. So what that will do, it enables the banks to be comfortable to lend to this person. From the data that we have, 70% of our borrowers are new borrowers. That shows that the scheme is activating lending to people who would otherwise not have access to credit. So that's really the role of the scheme in terms of de-risking, helping the banks have more confidence as they lend to the MSMEs. I hope I answered you.
So maybe Joshua, I can come to you. What would be the experience of the Africa Guarantee Fund on this Kenya market in that regard?
Let me take maybe 30 seconds just to say a bit about Africa Guarantee Fund. Africa Guarantee Fund is a private credit guarantee scheme that was established in 2011. It is AA- rated by Fitch, and since 2011 we've seen a lot of growth or take-up of the credit guarantee across Africa. The scope of cover is Africa. Kenya, just to speak about Kenya, I think to answer your question, Kenya has become one of the countries in Africa that has seen initially had a slow take-up of the credit guarantee scheme for various reasons, but today is one of the leading countries in terms of adopting or appreciating or accepting what credit guarantees can do in the market. Initially in 2013, you can imagine 2011 were established, but the first guarantee scheme was signed in Kenya in 2013. And that slow take-up was for various reasons. One of the reasons was because for some banks and financial institutions within the market, there was not so much awareness about what credit guarantee schemes are all about. So banks would really shy away, be cautious to want to take up this credit guarantee scheme. For those that who took up the schemes, the credit guarantees, it will take time trying to convince them because they had an experience probably with other schemes, and because of the way they were structured and the experiences they had, they took decisions not to follow that path. So it became very difficult to convince them to come on board on credit guarantee schemes. In Kenya, I think our experience shows that it is the tier 3 banks and a bit of tier 2 banks that were quite quick and fast enough to take up the schemes. Again, the other reason for tier 1 banks, it was an issue of, let me just say, without sounding, let me just say big man syndrome, looking at saying that we have the capital, enough capital to cover our SME risk. And they wouldn't need any other guarantee to do that. But what we have observed today in the last 1 or 2 years is even the tier 1 banks are coming on board. This is because of the understanding that it's not an issue about capital, that you have more capital than AGF, so why can a small person, how can a small person cover my risk? It's the issue about the objective. The objective of the credit schemes is to unlock access to finance to a shunned section of the market, and this is the SMEs. And to do that, because they're shunned as risky by the banks themselves, so they were not channeling funds to that segment. So this is basically a catalytic approach to the banks to say that we want you to channel more funds toward this segment with the ultimate objective of creating jobs and spurring economic growth. So this has been our journey, and today, from that one, today we are partnering with about 20 banks in Kenya and 10 other non-bank financial institutions. Over $1 trillion, even $2 trillion. In Africa, that gap is about well over $300 billion. $1 billion. I'm talking $1 billion. And for Kenya, the gap is about $25 billion. So that gap in itself cannot be covered by one institution, not even ourselves. So we have to play complementary roles. And so what we have been doing as AGF is engaging even public guarantee schemes run by governments across Africa to see how we can then share best practice, leverage on each other with the aim of trying to reduce this gap. So that is where the journey started with the Kenya Credit Guarantee Scheme. And I think in the last conference, 5th conference, when I met Ronald, and we were in the same panel as well, and the discussions, though they started a bit earlier, they were not moving, and he then engineered them and started moving.
Thank you very much, Joshua. I'm told we don't have, I think we are running out of time, so I'll take this opportunity maybe to ask the audience if you have any questions to the panelists. That's Joshua, Ronald, and Shigadi. Please make sure you know which participant you're directing your question to.
From National Bank of Ethiopia, Credit Reference in Web Collateral Registry Directorate. So I think my two questions regarding Web Collateral Registry for Shigadi. I think if you just specify some of list of or categories of movable properties that are registered in your system, what are the list of movable assets, and is it included also the intellectual property rights is part of the movable property, or is there any progresses regarding movable collateral registry?
I know you said that you've never made any payment, probably because of the performance of the facilities and the guarantee. You said the performance is good, 85% normal classification. But you also mentioned that you are processing some currently. So probably what do you check? What are the parameters before you make payments? And to Shigali, is it possible to have an integration between the BRS and the private bureaus so that probably we can have records incorporating encumbered assets or assets that are already registered with yourselves and the reports we consume from them? Thank you.
This one, so it's good to make that understanding. Shikati, you want to take up the question?
Yes, as BRS, integration with other entities is something that we are big on. I think that is a conversation that we can have on the side. Thank you.
Thank you very much. I think, Eddie, I hope I've kept time.